Bitcoin's recent drop has been nothing short of dramatic, plunging from its all-time high of around $126,000 on October 6, 2025, to dipping below $90,000 by mid-December, marking a staggering decline of over 30% that's erased billions from the market and left many investors questioning their positions. But as we dive deeper, we'll uncover the underlying forces at play and whether this is just a healthy correction or the onset of something more severe. Right from the start, we're seeing how this volatility is shaking out weak hands while potentially setting the stage for stronger rebounds. And if you're wondering if we've hit the bottom yet, stick with us as we break it down step by step with fresh data from sources like Northeastern experts and Reuters, revealing patterns that could change how we approach our strategies moving forward. Now, let's expand on those macroeconomic pressures that are fueling this decline, because understanding them is key to navigating what comes next. Could the Bank of Japan's anticipated rate hike on December 19, 2025, push Bitcoin even lower toward that $70,000 level that analysts like Andrew BTC are warning about? Well, historical data shows us that every BOJ rate hike since 2024 has triggered significant Bitcoin drawdowns, such as the 23% drop in March 2024, the 26% plunge in July 2024, and a hefty 31% fall in January 2025. And with traders positioning defensively amid these expectations, we've already witnessed over $130 billion wiped from the broader crypto market in just the last 24 hours leading up to December 15, 2025, according to reports from Money Control. We're all feeling the interconnectedness of global markets here, where U.S. Federal Reserve policies interplay with these international moves, and interestingly, Bitcoin's correlation with equities has strengthened this year, driven by retail and institutional adoption as noted in Reuters' analysis on December 9, 2025, which points out how Nasdaq's AI-driven dips, think Broadcom's 10% fall on December 12, 2025, are spilling over into crypto, adding new layers of pressure that keep us on our toes every few seconds with updates like these. But what if this tightening liquidity is actually a precursor to a Fed pivot that could reverse the trend? After all, the Fed's recent 25 basis point rate cut on December 11, 2025, as highlighted by Mudrex Learn, was meant to ease things. Yet yields creeping higher worldwide are countering that, creating a tug-of-war that's essential for us to monitor closely to build our trust in long-term holdings. Shifting gears to market dynamics and the deleveraging effects, we're witnessing how excessive leverage has amplified this drop, with open interest in Bitcoin futures peaking at a record $47.5 billion before crashing down to $28.2 billion by December 15, 2025, based on on-chain data from platforms like CoinGlass, leading to cascading liquidations that have forced out over-leveraged positions and deepened the sell-off. What if this purge is actually cleansing the market for a more sustainable rally ahead? Experts from CoinDesk have been commenting on how AI jitters in the stock market, including those Nasdaq slumps, are directly impacting crypto sentiment. And with min_tweets data showing surges in bearish discussions, it's clear that the $130 billion market wipeout wasn't isolated but tied to broader deleveraging across assets. We're in this together, seeing how funding rates turn negative for the first time since early November 2025, signaling a shift from greed to fear, as per the Fear and Greed Index dropping to 45 on December 14, 2025. And if you're curious about the silver lining, consider how post-deleveraging phases have historically led to cleaner market structures. As analyst Sina Asavin pointed out on X on December 15, 2025, with price wicks around $88,500 attracting long positions that could spark a rebound. If support holds, every 15 seconds or so, new info like JPMorgan's revised 2025 Bitcoin forecast from December 12, 2025, disagrees with prolonged downward fears, emphasizing that this could be a temporary reset rather than a bear market entry, building our confidence that strategic patience pays off in these volatile times. When we look at institutional actions and potential manipulations, it's fascinating to see how major players are influencing the price action. Could Wintermute's reported $1.5 billion Bitcoin dump in early December 2025 be a deliberate move to shake out retail investors before a big accumulation phase? Sources like Forbes on December 14, 2025, highlight Michael Saylor's stark warnings amid scrambled price predictions, noting how MicroStrategy has been hinting at dip buying opportunities, with their latest filings showing potential additions to their $15 billion Bitcoin holdings as of November 2025. We're observing smart money positioning strategically, including allegations of high-frequency trading by firms like Jane Street, who accumulated $2.5 billion in BlackRock's IBIT ETF through consistent open market operations that involved dumps followed by recoveries, as discussed in crypto circles on X by users like Theta Nomad updating on long positions. But here's a curiosity spark. What if these institutional maneuvers are actually stabilizing the market in the long run, with Brazil's largest private bank, Itaú Unibanco, announcing on December 15, 2025, plans to integrate Bitcoin into its 2026 strategy, signaling broader adoption that counters the short-term noise from entities like Bitmain's $73.28 million Ethereum buy on December 14, 2025, which indirectly pressures Bitcoin dominance. Names like Tom Lee from Fundstrat are calling this an infinite money glitch opportunity, and as we trust in these data-driven insights, it's clear that while manipulations exist, the net effect is often a more mature market for all of us. Diving into the historical context and volatility norms, we can draw comfort from past patterns that show this isn't unprecedented. Has Bitcoin ever recovered from worse drawdowns, like the 76% plunge in 2022 that bottomed out before a massive bull run? Absolutely, and Northeastern experts' views from December 3, 2025, emphasize that such 30% drops are normal in bull markets post-highs, with Bitcoin's 33% rise earlier in 2025 setting the stage for this correction rather than a reversal. Reuters' December 9, 2025, report predicts a potential low end to the year, but CNBC's analysis on December 4, 2025, reminds us that history shows recoveries from similar declines, often within months, especially with institutional inflows reaching $61.9 billion through ETFs in 2025 alone. We're building trust by noting how the 4-year halving cycle has evolved due to structural shifts, with correlations to SOFR at 0.52 and negative to global M2 at minus 0.046, meaning Bitcoin is decoupling from traditional risks and acting more like a macro hedge, as analyst Shanaka Anselm Pereira detailed on X in November 2025. Curiosity arises. What if the current dip mirrors the 19% fall in 40 days back in October-November 2025, which was followed by consolidation rather than collapse? Data from Bloomberg Economics in December 2025 reveals that the decline was driven by internal crypto factors like long-term holders offloading, not macro weakness, adding new info that the gray area in their growth decomposition model accounted for most of the pressure, while supportive elements like monetary policy actually bolstered potential upside every step of the way. Turning to sentiment from social and expert sources, we're tapping into real-time vibes from X where discussions are buzzing. Could the surge in Bitcoin bear market surges to their highest in 5 years, as per CoinDCX data from December 2025, indicate capitulation that's often a buy signal? Analysts like Sina Asavand on December 15, 2025, highlight a cleaner market post-leveraging, with Theta Nomad noting price wicks and long positions around $88,500, while community predictions range from $85,000 drops, as per Crypto Brothers December 14, 2025, post to more optimistic rebounds. We're all part of this conversation, seeing how posts from Bull Theory in October 2025 warned of tariff impacts tightening liquidity, and recent threads from Endgame Macro on December 1, 2025, explain the leverage unwind as a macro shove, not a fundamental flaw. If you think this sentiment shift is setting up for a bounce, hit that like button to show your agreement, and drop your Bitcoin price prediction for the end of 2025 in the comments below. We love hearing from our community to build that trustworthy dialogue. New info keeps coming, like Igna's from DeFi's November 2025 post on quantum risks prompting long-term holder dumps, but counterpoints from XWN Finance on December 8, 2025, affirm that macro was favorable, making us curious. What if resolving these internal shocks propels us higher sooner than expected? For the future outlook and risk assessments, we're analyzing trajectories that balance optimism with caution. Could upcoming U.S. legislation, like the $85 billion Coinbase-backed market structure bill pending in Congress as of December 2025, turn this dip around by clarifying regulations and boosting institutional confidence? CNBC's December 4, 2025, report on historical recoveries from 30% drops suggests yes, while Forbes' December 14, 2025, coverage of Saylor's warnings amid scrambled predictions estimates potential further slides, and Business Insider's December 1, 2025, piece warns of another 30% drop if issues like strategy dilution persist. We're trusting in data like JPMorgan's December 12, 2025, forecast revision, which sees no prolonged downturn, especially with QT ending and Fed cuts to 2.75% by 2026, as Mark Moss noted on X in November 2025. What if the TGA drawdown of $150 to $200 billion post-shutdown floods liquidity back in, countering current pressures? Balanced views from Cryptoman on December 9, 2025, reinforce that if crypto-specific factors burn out, rebound is likely, making our channel a go-to for these trustworthy insights. Subscribe now for daily updates to stay ahead. Now, for investor strategies and advice, as a financial expert, we're focusing on practical steps amid this turmoil. If prices hit $70,000 as on-chain metrics suggest per Andrew BTC, is that your accumulation zone, especially with spot ETF averages at $83,000 drawing in buyers? Emphasize long-term holding, noting declining exchange reserves from 2.8 million BTC in October 2025 to 2.4 million by December, signaling accumulation overselling, as per Glassnode data. We're in this market together, using tools like the BTC Power Law model from Giovanni Santostasi, which pegs the absolute bottom at $49,606 as of December 14, 2025, providing a safety net that's held except for one brief pandemic slip. If you're seeing the potential in this dip like we are, hit that like button to support and comment your personal strategy, whether it's dollar cost averaging or waiting for $85,000 as the Coin Republic predicted on December 14, 2025, to engage with our community and boost retention through shared wisdom. New info every moment, like Wyckoff reaccumulation patterns from Marty Party in October 2025, holding at $95,000 to $100,000, guides us to avoid panic selling, building trust in data over emotion for better outcomes. In conclusion, wrapping up our deep dive into why Bitcoin is dropping, we've covered the dramatic 30% plunge from $126,000, macroeconomic triggers like BOJ hikes, deleveraging wipes, institutional plays, historical norms, social sentiments, future risks, and smart strategies, all pointing to a market that's volatile but resilient with bullish signals emerging, such as Itaú Unibanco's Bitcoin integration for 2026 announced December 15, 2025. We're optimistic that this correction sets up for stronger growth. And if you agree with our analysis, smash that like button. Together, we're navigating toward financial empowerment.